Good morning, and thanks for joining us for a Tax Practitioners Board webinar. My name is Ashley Dowsard, and I'm hosting today's session. Today, I'm joining you from Ngunnawal and Ngambri country. I respectfully acknowledge the traditional owners and custodians of country throughout Australia and their continuing connection to land, waters, and community. I'd like to pay my respect to them and their cultures and elders, past and present. To begin, I have some quick housekeeping messages. First, to access today's slides, you can visit our webinars resources hub at tpb.gov.au/webinar-hub. We'll also email you a copy of the slides following the webinar. Today's webinar counts towards your continuing professional education or CPE, and you can claim 1 hour for attending. In relation to claiming your CPE, we'll issue an attendance certificate to those of you staying online for the webinar today. Today we'll be covering all things tax time. We'll look at the TPB's policy relating to client verification, our compliance focus areas, how engagement letters can assist you and your clients, Code Item 2, which is personal tax obligations, and what the Tax Practitioners Board is doing to enhance consumer confidence in the tax profession. We'll also discuss conversations to have with your clients this tax time, what is new this year, ATO key focus areas, common mistakes or red flags to watch out for, and what support the ATO are offering tax practitioners. At the end, we'll answer some of the common questions we received during the webinar, so make sure you submit your questions via the Q&A once we get going with the presentation. We will close the chat, so make sure you use the Q&A section. In that regard, we have Nadia from our policy and legislation team joining us to respond to your questions as we go. If your question relates to the ATO, we will answer as many of these questions as we can at the end of the webinar. But if we don't get to your question today, we'll respond out of session. Now, I'd like to introduce you to our speakers for today. Firstly, we have ATO Assistant Commissioner of Engagement and Support, Sarah Vorsa. Welcome, Sarah. I'd also like to introduce TPB board member Deborah Anderson. Welcome, Deborah. Thank you both for joining us today. Now, I'll hand over to my colleague, Julie Shaw, to kick things off.
Thanks, Ashley, and welcome to everyone who's joining us today. Deborah, I'd like to start things off with you today and start the conversation by chatting about client verification. Now, the TPB has Proof of Identity or POI guidelines, which set out the requirement for tax and BAS agents when verifying client identities. So can you please tell us a bit of information about this guidance and why it's important to our tax practitioner audience?
Sure, Julie, and good morning to everybody. Thank you for joining us this morning. So recently, we've been seeing a lack of proper identification processes in tax practitioner practices, which have been resulting in tax and identity fraud. So being a practitioner makes you an extremely attractive target for hackers. They will attempt to steal yours or your client's personal information to commit identity fraud, lodge false claims on your behalf, and disrupt your business. So that's why it's increasingly important that you, as a tax and BAS agent, are vigilant in undertaking adequate client identification processes. And that will help minimise risks of identity fraud that affect you, your clients, your practice, and the entire system. Our guidance will help you verify your client's identity through the proof of identity checks, and we'll send you a link to that information on our website after the presentation. But don't forget, you also need to do proof of identity checks on clients' representatives. So for example, if it's a husband and wife and you're dealing with one person, you've got a letter of authority, you need to get identity for everybody. So we all know, or we know, that most of you are already undertaking client verification checks. So our guidelines are aimed at making the proof of identity checks contemporary, consistent, but more importantly, streamlined across the profession. But just as a reminder, these requirements are mandatory. So if you weren't already doing them or you're not already doing them, you should have already adopted the proof of identity checks in your practice some time ago. It's really important because if you fail to properly verify or a new or even an ongoing client or their representative's identity, you may be in breach of an ongoing registration requirement. And in particular there, I'm talking about code items 1, 7 and 9 of the Code of Professional Conduct, and also the civil penalty provisions in the Tax Agent Services Act 2009, which I'll call the TASA because it's so long. And in that, we may find that you have also ceased to be a fit and proper person to be registered with the TPB. Now, we've also developed a really handy fact sheet that summarises our requirements so you can share that with your clients so they know what you could ask them when verifying their identity. And as many of you know, I am a practicing tax agent myself, and I find this really useful because it lets clients know that it's not them and it's not you, it's actually the way of the world these days, and it is a requirement for you to be a tax or BAS agent to do the proof of identity checks.
Thanks, Deborah. We'll also send everyone a link to the fact sheet as well, just so that you know where to find that. Could you just now give us an overview of what evidence is required for tax practitioners to validate their clients?
Sure. For individual clients or individual representatives, you need one primary photographic identification. So, you know, that could be a passport or a driver's license for example, or if they don't have their photo ID, it can be a primary non-photographic ID and a secondary ID. Now, there's quite a list of IDs that we will accept. So if you have a look at our website, it is quite comprehensive. Have a look there and it will give you a list. For non-individual clients, sorry, I seem to be a bit tongue-tied today. The documents that we need are evidence that the client actually exists. So that could be I'm thinking an ABN, ACN, ASIC extract, something like that. But in those cases, there's usually a representative as well. So you need to cite a legal document that shows that the representative has the authority to represent the non-individual client as well. As I said, our guidance goes into a lot more detail about what information you need for both individuals and non-individual clients and their representatives. And we will be sending that out later on. The one thing I do want to give you, though, is when you are looking at the photographic identification, please make sure that you're actually checking it, not just doing the tick and flick, right? So you want to be making sure that the details on the identification match what you're expecting to see from the client. So their photo actually looks like them. And we all know, you know, passport photos don't look like us, but generally, but you can tell, right? You know, is it the right hair and the right face? Those types of things you need to be really looking at. Also check the other details, addresses, date of birth, those kinds of things. And if you're not sure, ask for more identification, ask more questions. If you're unsure, better safe than sorry.
Thanks, Deborah. I think that's some really good advice and makes a lot of sense. I'm just curious now, if a tax or BAS agent can't adequately identify the client, what should they do to verify these types of clients if they have some issues there?
Yeah, look, we do know that sometimes it can be difficult because not all clients have standard identification, and some clients don't have their identification because of certain situations. It could be domestic violence, or, or refugees, or they're in the middle of a natural disaster or something like that. So what we do encourage is that you take a flexible approach and use your professional judgment. And again, I think there's some really good guidance about that on the AUSTRAC website that you can have a look for those people that don't have standard or traditional forms of identification. But what we do say is, please write down or document what the circumstances were and what you did do in those in that situation, what you tried to do, and make sure that you keep that information. And you do need to keep that information for a period after you've disengaged that client as well. So really important, but do take a pragmatic approach and have a look at the AUSTRAC website, because they've got some really good guidance on those types of situations.
Thanks, Deborah. Next, I'm just curious about technology. So I know a lot of people now working from home, and the use of technology is becoming increasingly common. So can tax practitioners confirm a client's identities via electronic and remote verification methods? Is that okay with the TPB?
Oh, absolutely it is. And that's one of the reasons why we tried to make the guidance contemporary. And so there are various ways that you can safely and securely receive sensitive information from clients, including their identifications or other evidence. The one thing that we do say is, please do not email or encourage your clients to email or use non-encrypted methods of communication. If there is no other option but email, make sure that they are password protected documents, and don't send the password with the email. Maybe send the password via SMS or something like that. So there's actually two ways, or give it to them over the phone. Email isn't safe, obviously. So you can use portals, you can use password protected documents, you can use encrypted forms of verification. You can use things, document verification service. They're relatively cheap and easy to use, where clients can do their verification online. If you are unsure, speak to your IT person, your security IT person, because we know they're not always the same, but ask them for some advice on that. The other alternative is here, like we're on Zoom today, or you can FaceTime a client and actually, do the, show me your identification here, and, can you move it a bit closer so I can double check it? And again, document everything, the date, the time, the documents that you verify, but please don't record the full documentation. If you do ever get hacked, the one thing that we don't want is you to have copies of their documentation on hand, because that can be compromised. So again, if they're emailing it to you, delete, right all the way through. If you are doing what they've got, so say for example their driver's license, treat it like it's a credit card. So you wouldn't write down somebody's credit card, their expiry date and their CCV. You would write XXX credit card, 1, 2, 3, the last 3 digits of it, or something like that. So, use that as a bit of a protocol, and make sure that their identity information is safe with you.
Fantastic. Thanks, Deborah. We might move on now to have a look at the TPB's compliance focus. Could you let us know what sort of things that the TPB will be looking at this tax time in terms of compliance issues?
Yeah, look, the TPB, at the TPB, we are really committed to ensuring that tax practitioner services, and when I say tax practitioner, I'm obviously talking about both BAS and tax agents, but ensuring that tax practitioner services are provided to the public in accordance with appropriate standards of professional and ethical conduct. And just touching on what we talked about proof of identity, tax time is the peak time for identification or fraud. So, you know, at this particular point in time, you need to be even more aware, especially when you are dealing with people just electronically. So even people that you've dealt with last year and you're dealing with them on email, make sure the person you're speaking to is actually the person you're speaking to. Anyway, this year we always do some targeted compliance programs that focus on those high-risk tax practitioners. And we're obviously doing that to protect consumers and enhance the integrity of the entire tax profession and the tax and super system. So what we're looking at is those practitioners that are reckless in their work, and that might be, you know, somebody just not checking, you know, basic things like the DGR status of donations, or that, you know, there's actually a logbook in existence, or, you know, just those sort of really simple things. Then we have some of the more egregious, where they are unknowingly or knowingly being an accomplice or just turning a blind eye to things. And also those practitioners that facilitate or implement or promote schemes, or they are the architect or participant in unethical arrangements. And those unethical arrangements could include things like unregistered tax practitioners, enabling them to be able to operate in the system. And again, we're also targeting unregistered tax practitioners that are trying to fly below the radar using MyGov credentials, or MyGov ID credentials, I should say. And we're also looking at tax practitioners who are non-compliant with their own personal tax obligations, who are not doing their CPE, so keeping up to date with you know, the education requirements, and also a really easy one, professional indemnity insurance. And just quickly there, if you haven't updated or you've renewed your PI recently, go online to our into your portal on the Tax Practitioners Board website, and please upload and update your professional indemnity insurance details. Now, we do recognise and we appreciate that the majority of tax practitioners do the right thing, but for those that don't and that are risking their clients, the public or Commonwealth revenue, we will act, and we will we will come down, you know, very hard on those people. And we believe that taking action to address the behaviour of those few, to uphold in the professional and the ethical standards, is actually part of supporting you, the good practitioners, those who are trying to do the right thing. And with that being said, it's no surprise that our focus areas for the moment are undertaking illegal and illicit activities in the shadow economy, facilitating systematic and willful disregard of, excuse me, and obstruction of tax laws. So in particular, work-related expenses and early release of superannuation. And also those that allow their tax practitioner or their tax registration to be used by others, and also using their position and accessing information to undertake criminal activities. Yeah, I think that's our focus for this year. Is quite a lot on there.
There is. Thank you for sharing all that, Deborah. I think we actually do get a lot of questions all the time, really, about engagement letters, but I think it's an important thing to talk about at tax time as well. So I'm just wondering if you could give us some information about them. I do know that they're not a legal requirement, but we do highly recommend that tax practitioners use them. So can you give us some tips on engagement letters and how they can help practitioners comply with their obligations?
Sure, Julie, and you're right. Engagement letters are not a specific requirement of the Tax Agent Services Act 2009, but we highly recommend them. And just on a side note, if you are a member of a recognised professional association, they may be mandatory for you, so please check that as well. Although they're not mandatory for the TPB, they are a really important and effective tool they're the starting point of your engagement and your conversations with your clients, and also a really good opportunity to do a proof of identity check when you are doing your engagement letters as well. So you don't waste time on a client that turns out to not be legit. But what is really important with the engagement letters is that they can protect you. They can make sure that you are abiding by all the code items of the Code of Professional Conduct. But even more importantly, they can ensure that you and your clients have a shared understanding of what is expected from you and from them in this engagement. So again, it's that starting point. And you know, I say this all the time, but one of the things that happens with complaints that come into the TPB, the very first question we say is, show us the engagement letter. Because a lot of the times, had you had an engagement letter in place, the complaints wouldn't have happened because they would have been resolved in, you know, with the information that's in the engagement letter.
Thanks, Deborah. Could you also now give us some information about receiving client money or property? So if people have that on trust, what are some of the things that they need to be mindful of?
Yeah, of course. It is really important, and you can actually include this in your engagement letters too, how you will deal with property. And, you know, property includes money. So it could be money that you've held. It could be client tax refunds. It could be money that you're holding or has been paid to you to get some specialist advice from an external party. But this is one of your obligations under Code Item 3 of the TASA, and that is that you do need to keep the money or property held on trust separate from your money. And we call it separate from your personal money, but we don't mean necessarily your personal bank account. We mean it has to be separate from all your accounts, right? You cannot mix it in with your business account. It needs to be a separate account. It needs to be accounted for. It must only be used for the purpose that it was intended, and you must have an authority to do so. So, you know, make sure it's always in writing. And again, your engagement letter can really help with that. You need to maintain proper records for all of that property, money, anything that's held on trust. You need to comply with all laws and regulations relating to the custody and accounting for assets or money on trust. And you need to disperse the money only in accordance with the express client instructions or as required by law. So, you know, that's telling you need to have this in writing, and you need to have that agreement in writing. And really importantly, you need to pass on any refunds to your clients really promptly. And at the TPB, our expectation is that it will be passed on to them within 2 weeks. So unless there are exceptional circumstances, or whether there is an alternative agreement between you and your client, 2 weeks is our expectation.
Thanks, Deborah. And I think that's a great inclusion for everyone's engagement letter as well. Now, before you spoke about the TPB's compliance focus, including the fact that we'll be looking at tax practitioners completing their own tax affairs, and we know that sometimes, you know, things get in the way, and tax practitioners are looking at their clients, and that's the first thing that's in their mind, and they sometimes forget about themselves. Can you touch on this in a bit more detail and just remind everyone here of what their actual obligations are in terms of keeping their personal tax obligations up to date?
Yeah, I'd love to, Julie. It's such a great point. You know, as a tax practitioner, you play a really important role in influencing and supporting the entire tax and super system. And so there is a increased expectation from the community as a whole as to you keeping up to date with your tax and super obligations. Now, Code Item 2 says that you must make sure that your personal tax affairs, including those of your related entities, are in order. So what does that mean? when we refer to your personal tax affairs, we're not just talking about you as an individual. So we're not just talking about, Deborah Anderson's tax affairs. We're talking about the wider personal tax affairs. So that could be the individual person, the company, if you have a self-managed super fund, if you have a trust, all of those. And we're not just talking income tax returns, we're talking BASs, IASs, we're talking FBT, we're talking TPAR lodgements if you're in an industry that has to do that. And, we're talking about DPNs, we're talking about superannuation, we're talking about all of those, right, for all your related entities. Now, those are the related entities that you have control over. So generally, if you're a shareholder of a private company, you would have control over it. Obviously, if you're a shareholder in Telstra, you obviously don't have control over that. So use your professional judgment. But this is one that is so avoidable. As tax and BAS agents, you're professionals in this area. And it's really easy to do your own. So, I personally do mine first. I've got all the information ready to go. So, so if I just summarize that, it's you, it's your company, it's your partnerships, it's your trusts, it's your self-managed super funds, anything that is related to you. And you need to make sure that you've complied with the lodgement. So they need to be lodged on or before the due date. They need to, you need to make sure your employer obligations such as super guarantee and PAYG withholding is lodged and paid on time. You need to make sure that your tax debts are paid by the due date or you have entered into and are complying with a formal payment arrangement with the ATO. And don't forget on this point, you need to actually advise us if and when you go into a payment arrangement with the ATO. That is a requirement under the TASA. You need to make sure that you've complied with all the tax obligations. Again, all your entities make full and complete disclosure when you are applying for registration or renewal with the TPB, and notify us within 28 days if there are any changes in circumstances that could mean that you are no longer meeting a registration requirement. And that could be something like you've got no PI insurance or cannot get PI insurance. It means whether you're no longer potentially considered a fit and proper person, so bankruptcy, it could be a criminal conviction. So anything that can change, you do need to let us know. We will also look at the debts or any monies that are owed to the Commonwealth of Australia or public monies that arise from employer obligations that are related to you or any of your entities. So, and we recognise that failing to meet employer obligations, just as your personal tax obligations, will have a direct impact on taxpayers, on their retirement benefits, and even their ability to be able to retire. So we do take personal tax obligations incredibly seriously.
Thanks so much for that, Deborah. I'm thinking we'll finish off your section now just by highlighting how the TPB is working to enhance consumer confidence in tax practitioner services this tax time.
Sure. We are raising the awareness through advertising campaigns. So at the moment, I believe we've been on a few podcasts. We're also doing some online banner advertising, etc. So keep an eye out for that. Feel free to share that if you do see it or hear it with your clients and friends and family. One of the things we're trying to encourage is to make sure that taxpayers make sure that their practitioner is registered. And we do that by saying to them, look at the register, but also look for the TPB symbol when they're looking for a tax practitioner. So feel free to download your symbol from the TPB portal. It's a unique symbol to you. It has your registration number on it. Yeah, we will be running those campaigns all the way through June. The symbol is free of charge. Obviously, you don't have to pay for it. So download it, use it on everything, you know, business cards, electronic, printed, websites, emails, anything you've got, feel free to use that and promote it, because you promoting it increases awareness with the public as well, that they need to be looking for registered tax and BAS agents. Yeah, use it.
Fantastic. Thanks so much for that great update, Deborah. I'll hand over to Sarah now so that she can discuss some of the key messages from the ATO this tax time.
Brilliant. Thanks, Julie. And I've been trying to skim through the questions as Deb was talking, but if there's anything that you want to throw out, Julie or Audra behind the scenes, feel free, because I am multitasking. It's all on one screen, so I don't want to be touching the screen in front of everyone. So like I said, thank you for having me here today. It's really great to have the opportunity to talk about Tax Time 24 and I guess the things that you and your practice can do to prepare. So today I plan to run through a few things. So conversations that you can be having with your clients to get prepared for tax time. I'll talk about Tax Time 24, so what's new, some of the things that we're looking at. I'll also talk about common mistakes or red flags and the things that you can do to support your clients around that. And lastly, I want to talk about you, the support that's available for you. So let's start by talking about Tax Time 24. Now, in terms of what's new for Tax Time 24, I was just going to touch on three things very briefly. So the instant asset write-off, small business energy incentive, and also the not-for-profit return. Now, the first two, hopefully you've heard of them, are aware of them, but they're not yet law. So the instant asset write-off is about extending the instant asset write-off to $20,000 up until June 30, 2025. Now, that one, again, not law, so it's been announced. The second one has been announced also, the small business energy incentive. So with that one, the government's announced that the incentive will be for for businesses. I can't talk today either, Deb. So for businesses with an aggregated annual turnover of less than 50 million. And so what that will do is allow an extra 20% deduction on spending to support the more efficient use of energy. What that really means in practice is that businesses will be able to apply the incentive to eligible assets up to a maximum of 100,000. So the maximum bonus deduction there would be 20,000 per business. Now, just reiterating, both of those are still to pass law. The last one I was going to touch on is the not-for-profits return. So hopefully you're aware of this, but just in case, from the 1st of July, not-for-profits with an active ABN will need to lodge an annual not-for-profit self-review return, confirming their eligibility to income tax exemptions. Now, importantly, the law itself hasn't changed. It's actually the administration that's changing here. So not-for-profits that self-assess as income tax exempt, they've always been required to review their entitlement to that exemption and maintain documents that satisfy their operation as a not-for-profit. So really what this change means is that they're now required to lodge an annual not-for-profit self-review return to confirm their eligibility to that exemption. The new reporting requirement doesn't apply to registered charities that are endorsed by the ATO as income tax exempt, or certain types of government entities, taxable not-for-profits, or not-for-profit sub-entities for GST purposes. Now, if you've got a client who is a not-for-profit, as a registered agent, you can lodge using online services for agents. Given us a new sort of piece, there is heaps of information that's available on our website. There's also some webinars that are really, really informative. So that's probably all I was going to touch on in terms of what's new. I might move now, Julie, to some of the key focus areas for tax time. Excellent. So I'm going to guess it's going to be no surprise to anyone when I talk about what some of those focus areas are. So this year we'll be looking at sources of income, we'll be looking at substantiation, we'll be looking at rental properties, and we'll be looking at deductions, just to name a few, but they're some of the biggies for this year. I might start with working from home. So in 2023, there were about 8 million people that claimed a work-related deduction, and about half of those claimed a working from home deduction. Now, with the changes that were implemented last financial year, we're really continuing our focus to ensure both you and your clients have the right support to calculate these deductions. And importantly, we're relying on you as agents to make sure your clients understand their eligibility to claim and what they need to do to make sure they can claim. So if you haven't already done so, please let your clients know that really to be eligible to claim the working from home deduction, there's a couple of important things that they must satisfy. So firstly, they've got to be working from home to fulfill their employment duties. So we're not talking about taking a few phone calls or doing a couple of emails on the side. We're genuinely talking about working from home. The second thing, an important piece, is that they must incur additional expenses as a result of working from home. So that's a really important one to let clients know, because I think that trips them up at times. If they satisfy both of those, they've obviously got to have records that show the expenses they incur and the hours that they've worked from home during the year. Now, for 23-24, there are two ways to calculate the working from home deduction. The first is the fixed rate method. So that allows your client to claim a set rate of 67 cents per hour that they work from home. Or there's the actual cost method, where they can claim the actual work portion of their expenses. Either way, it's important for your client to keep the right records. So things like evidence of running expenses, such as phone and electricity, a record of the hours worked, such as diaries, timesheets, or similar, and receipts and supporting documentation for things that they buy, so depreciating assets such as computers, furniture that are specifically purchased to work from home. It's really important to try and get your clients into good record keeping habits. I know that can be a really difficult thing, but if you get your clients into that habit, it gives them the option to work out between both of you what is the best option for them in terms of claiming their working from home deductions, and also sets them up for future years so they know what they need to keep. A couple of other things in terms of just, I guess, focus areas, claiming car travel. So if you have clients who are eligible to claim car expenses, I'm sure most of you know this, but there's two ways that they can claim those expenses. They can either, firstly, then claim it in the cents per kilometre method, or secondly, they can use the logbook method. Now, if they're using the cents per kilometre method, that has gone up from 78 to 85 cents per kilometre, and they can only claim up to 5,000 kilometres per vehicle that they're using for income producing purposes. If you're using the logbook method, it's really important that your clients understand the substantiation requirements for that logbook so they don't get tripped up at the other end when we're asking them to substantiate that. The final thing I might mention just for tax time 24 focus areas is just around rental properties. So just probably a stat that you may or may not be aware of, but the ATO's review of income tax returns shows that 9 out of 10 property owners are getting their returns wrong. So I'm going to let that sink in. Like, that's 9 out of 10 people are getting their returns wrong. Now, for the most part, they're accidental mistakes. So we're not talking about people who are deliberately overclaiming in many instances. It's more that they're making honest mistakes, either around the income or the deductions. And we really need you as agents to support your clients to understand what they need to do to make sure that they are getting it right. And I'll talk about that in a bit more detail when we talk about some of the pitfalls. Actually, that's probably a good segue, I think, to move into, I guess, what are some of those common mistakes and some of the conversations that you can be having with your clients to avoid some of these mistakes. Now, there's a few things that I was going to touch on in this section. Firstly, I was going to talk about preparing your clients, talk about lodging. I was going to talk about income and deductions and a couple of things that do trip people up. And I was going to finish off just talking about the tax cuts. So just in preparation, as you prepare your client before they come to see you, it's worth letting your client know what information they will need to be aware of. So things such as what sources of income they must include in their return, what sort of some of the allowable deductions or tax offsets that they're potentially eligible for, and the substantiation or records that they will need for those. And it's probably a good time for them to just have a bit of a overall kind of tax health check around all the things that go into the tax return. So, you know, have they claimed the correct private health rebate, for instance? Have they claimed the tax-free threshold correctly so they're not claiming on multiple jobs? You know, have they informed their employer about study or training loans? All of those things, if, you know, they can amount to, you know, essentially bill shock for the client. So if they're aware of these things before they come in, at least they come in knowing what they need to know. Talking about lodging, one of the key messages that we have been putting out now for a few years is the importance of lodging at the right time. Look, we do know like clients, there will be clients who want to lodge pretty much on day dot. If they're expecting a refund, they're going to want to try and get their return in. And we do understand the pressures that people are facing right now. But the best way for you to ensure that your client gets the return right is to wait until the pre-fill data is available and their income statements are marked as tax ready. We do actually see a lot of mistakes in July where people have forgotten to tell their agents about things like bank interest, dividend income, payment from other government agencies, a whole host of things where pre-fill will actually overcome that. So really to really help your clients get it right first time, waiting for pre-fill really does help them. We gather information from a range of sources, so wages, health insurance, interest, and really, our data matching protocols are pretty advanced, to be honest. In 2023, we pre-filled over, it's about 111 million, maybe slightly more pieces of data using our data and analytics technology. So you can see from that, there's a lot of information that is available to help your clients get it right first time. And most of this information is pretty much available by the end of July. So where you can, really try to encourage your clients to wait. Just moving on to, I guess, a couple of areas, income and deductions. So the first one from an income perspective, and I'm sure most clients are fairly savvy around this, but it still catches people out, is a tax-free threshold. So where you've got clients who do have multiple jobs or multiple sources of income, it's really important that they understand that from an employer, they're only claiming the tax-free threshold once, and just how that works on their income. It's also important to ask your client, other sources of income they might be getting. So rental income, investment income, government payments, trusts, partnerships, and also the rise in digital platforms and, what was known as side hustle, I guess, which now can be some people's full income stream. So it's important that clients understand the impacts of those digital platforms and that income from a tax perspective is treated the same irrespective of where they're earning it from. So a big one for, say, the sort of sharing or gig economies is things like the non-cash payments. Now, sometimes businesses or individuals, they receive goods or services or other kind of gratuities or group gifts rather than income. But it's important that if your client receives non-cash payments, that the market value of the goods or services needs to be included as income in their tax return. This one does catch people out, so important to understand that one. The other one is around crypto. Now, I am not a crypto expert before you throw 100 questions at me, but it's really important if a client is dealing in crypto that they do understand the consequences around that. For the most part, crypto is treated the same as most investments. Therefore, there will be a CGT event when there is disposal of crypto. But it really depends on the circumstances and how your client's using that. So I encourage you, if you have clients who are in the crypto space, to make sure you've got the information that you need before you lodge their returns. Just moving on to deductions. Now, really simply, there's 3 golden rules when it comes to deductions. And if everyone remembers this, we can stamp it out there. It'll make it much easier for people. So firstly, your client must have spent the money themselves and not been reimbursed. Secondly, the expense must directly relate to them earning their income. And thirdly, they must have a record, usually a receipt, to substantiate it. What we do sometimes see is double dipping of deductions at tax time. And a lot of that is unintentional. So it might be things about not quite understanding the different types of work-related expenses and where they need to claim. Things like rental income can trip people up. So that's what I was talking about before in terms of the sort of 9 out of 10 getting it wrong. A classic mistake that we see is that clients will take their net income, and so net rental income, as their total gross income instead of the gross income. So the net income that they're receiving from the real estate agent or whoever they're getting it from will have taken out all of the deductions already. And what we often see is that they'll put in the net income as their gross income and then claim the deductions again, which have already been taken out in that net income. So it's a bit of a trap that most people fall into, or can fall into, sorry, I should say, if they're unaware of that. The other thing from is the working from home deduction. So if your client is using the fixed rate method, the 67 cents, they can't claim separate deductions for general running costs, so things like electricity and gas, phone and internet, because all of that is included in the 67 cents. So they're probably the big ones from a sort of deductions and income. A couple of others I just wanted to mention, because these are kind of the bill shock ones that maybe people aren't expecting, just around Medicare levy surcharge and private health insurance rebate. So some clients get caught out by the fact that income tiers apply to Medicare levy surcharge. So if your client and the dependents, including their spouse, don't have adequate private health insurance for the year and their income is above a certain threshold, they'll need to pay the Medicare levy surcharge. Now, the higher their income, the higher the income tier, and then the higher the percentage of Medicare levy surcharge they'll need to pay. Now, if you do have clients who are likely to pay the Medicare levy surcharge, it's a good idea to have a conversation with them to let them know that that Medicare levy surcharge hasn't been withheld, with their tax has been withheld from their pay. So what that means in a practical sense is that the Medicare levy surcharge will either reduce their refund or could end up with a tax bill. The same kind of principles apply to the private health insurance rebate. So if you've got clients who are claiming the private health insurance rebate directly from the provider, it's important that they understand that they're claiming the right income tier, because if they're not, the same thing could happen. There's a bit of a bill shock thing. If they're claiming too much rebate, it'll have a balancing effect in their tax return and the same outcome in terms of reducing their refund or potentially a tax bill. Just finally, I just wanted to talk about tax cuts. Now, it's not something specific for this year, but there's been so much media about tax cuts that it's definitely worthwhile having a conversation with your clients to let them know that the tax cuts don't apply to the 23-24 year. So it's not going to affect or change their return in any way. The tax cuts come into effect from the 1st of July 24. So what your clients will see is an increase in their take-home pay from that time, not a change in, I guess, their tax return. So I guess they're probably the main things I was going to touch on, but there's a whole stack of information on our website, tips about, before you lodge and things that you can talk to your client about or show your client on our website so that they're prepared when they come in to see you. All right, and finally, now I want to talk about you and the support that's available for you. So I'm going to talk about a couple of things. I was going to talk about lodgement support, because I know that's the time of year, particularly now, where we get a lot of questions around that. And I was also going to talk about security sort of practices, although Deb's covered that pretty well, so I won't spend too much time on that. So from a lodgement perspective, our flagship support mechanism is actually our lodgement program. Now, I'm sure most of you know what our lodgement program is, but our lodgement program is really recognition of, the really important, part that agents play in the tax and super system. Now, the intent of the lodgement program itself is to help you spread your work over a 12-month period. So essentially, you get extended due days. Now, the one thing about that, and some of the traps that I see people fall into, is that you've got up until a particular date to lodge those returns, but we encourage you to lodge progressively during that time, because that date is the date you have up to lodge that return. It's not meant to be a whole new peak for you. It's about spreading your load. And we do see people falling into, sort of that kind of mistake where it sort of piles up and they're trying to lodge everything at once and it gets too much. Now, lodging progressively, will actually put your practice in a really good position. If you do find yourself in a situation where you've got unforeseen or exceptional circumstances that actually get in the way of, being able to meet some of your lodgement obligations with your clients. So if you've been lodging progressively, it's going to have a lesser impact on your practice and your clients. But saying that, whilst we've got the lodgement program that's there to manage your workloads, if you do find yourself in unforeseen or exceptional circumstances, most of you will be aware of lodgement deferrals that are available to be requested. Now, you can request those through online services for agents. So we've got a streamlined process now where if you do need to have a lodgement deferral due to your circumstances, you do that through online services for agents. One of the really important things when you're putting that in is to really clearly explain what the unforeseen circumstances are. Too often we're seeing lodgement deferrals come in without the information that we require to actually assess whether that is, whether we can actually defer that lodgement. So the things that are critical to include in your lodgement deferral application are what are the unforeseen or exceptional circumstances that you or your client are facing? you need to explain how these circumstances are affecting your ability to lodge by the due date. And if applicable, if it's after the due date, why that you're making this lodgement, the application after the due date. Now, what we are seeing quite often, instead of having that information, we're seeing very generic information put into these requests. It's pretty obvious that's been cut and paste, and there's insufficient detail for people at the other end to actually assess whether that lodgement deferral is valid. Now, what that means in practice is that if there's not enough information, then we're not able to assess the request, and that will end up resulting in the request being declined. Now, that results in a reverse workflow for you and the ATO, and we're certainly seeing that at the moment. There's a lot coming in that are being declined because we're not getting the right information, which means it's actually then taking more and more time for us to process through those deferrals. Talking about support though, if you're finding that your whole practice is experiencing sort of unforeseen circumstances or circumstances where, it just is affecting your whole practice or the majority of your practice, then we encourage you to get in contact with us because the supported lodgement program might be right for you. Now, we have a supported lodgement program which is designed to help practices of all sizes get back on track. So it's really about having a conversation and a tailored discussion around how do we help you get back on track and get you in a position where you're actually able to manage your lodgements. Now, the thing I would say with that is get in contact with us early. The earlier you get in contact with us to have that conversation, the easier it is going to be for you to get yourself back on track. Now, information about lodgement obligations, due dates and deferrals is all contained in a pretty comprehensive practice statement, which is 2011-15. So you can always refer to that if you need more information about it. And there's heaps of information on our website as well. Now, just lastly, I was going to talk about how you protect yourself, your clients, and the tax and super system against fraud. As we everyone knows, identity fraud, continues to be a shared risk for all of us. One thing you can do is look at your own security practices and making sure that you're protecting the data in your own systems so that when you're accessing ATO systems. We do have a checklist on our website that you can refer to that'll just give you some indications of things to look for. Also, keeping up to date with your client lists and making sure that you have the right POI. I know Deb's spoken quite at length of that, so I won't talk about that. More broadly, we've introduced several, changes that protect client identities and accounts. So that includes online access strength, client to agent linking, and a was issued message sent for all new MyGov linking events to a valid mobile or email. It's really important to have that conversation with your clients and just remind them about the risks of scams and the consequences of those scams, like if the accounts are compromised or you have locked accounts. Being alert to fraudsters is really important, and providing timely reporting of any suspected fraud via the Tax Integrity Centre or to the Tax Practitioner Board as well. So I think that pretty much takes me to the end of the things I was going to cover today. There is a whole stack of information. I know this is a big topic when it comes to tax time, but there's information on our website. There's tax time toolkits. There's a whole heap of information for agents around things that will support you in supporting your clients as well. So thank you very much, and I might pass over to you, Julie.
Wonderful. Thank you so much for that update, Sarah. It's really appreciated. I just wanted to alert everyone that we have had a lot of questions today, so we aren't able to answer them all, obviously, but we'll get to as many as we can while we're going. But I do have a few questions that I'll put to Deborah and Sarah now. So Deborah, I'll go to you first because we've had a few questions around POI, which you spoke about at the beginning of the session today. I'm just wondering if you can tell us how often tax practitioners should check identities in terms of client verification.
Yeah, it's a really good question, and we do recommend that you do it annually. However, use your professional judgment. Okay, so for example, my daughter, who's one of my clients, doesn't get paid for. I don't get paid for it though. Do I need to verify her identity? No, I don't need to verify her every year. I know who she is. But if you've got new clients coming on board or clients that you deal with remotely, which is really becoming very common these days, that all you're doing is emailing or telephone calls, etc., you might want to think about doing those ones more regularly. Clients that you go on site for, that you see, you probably, again, use your professional judgment. You probably don't need to verify them every single year, maybe every second year, because I understand things like the document verification services can be expensive. So, use your professional judgment, but just remember, the more distant you are from them, the more often you should be doing it.
Fabulous. Thanks for that, Deborah. Just another question along the lines of POI as well. If the client has been referred to the tax practitioner by another accountant or tax practitioner, do they still have to do the checks, or can they rely on the other person's checks that they've completed?
Yeah, great question. I saw a few people asking that online. Yes, you do need to do your own proof of identity checks. You cannot rely on the fact that somebody else has done the checks. So yes, you do.
Yep, great. Okay. And just one more POI question before we move on, I think. Do we need to take scans or copies of clients' POI documents and then hold them on file? So can they just cite them? Do they need to keep them? And how should they do that?
Please do not keep them. Okay, so what we want you to do is cite them. And if they have been sent to you via email or other method, delete. And make sure they're deleted out of your deleted folder, and make sure they, all of that kind of information. Now, I know one of the other questions was, well, how can we prove that we did it? It is all about documentation. So document that you did the verification, how you did it. Did you do it via Zoom? Did you do it via WhatsApp? Did you do it via a DFS? How did you do it? What date and time did you do it? What documents did you look at? And mark this type of document. So, for example, it might be Deborah Anderson, New South Wales driver's license, card number XXXXX92, and I did it on this date at this time. Please do not keep any clients' identification documents on your computers, on your phones, on anything.
Thanks, Deborah. That's great advice, because we do know that tax practitioners are targeted quite regularly because of the information that they do hold. So it's really important to keep that information off your computers, and yeah, thanks for keeping it safe.
Right?
Yep.
Just be aware, and also make sure it's secure. I could see in the chat people are like, if they SMS it, is it secure? Well, is it a encrypted system that you're using, right? So please be really careful. If you think the Optus or Medibank hacks are big, wait till they actually have physical copies of photographic ID, etc. So, and even if you're taking a photocopy of it, I mean, you shouldn't be, but if you've printed it out for some reason, shred, big shred.
Yeah. Thanks, Deborah. Sarah, I'll go to you next. I've got some questions here for you as well. So onboarding clients, does the ATO have a timeline on when they'll roll out the new method for onboarding individual and sole traders with an ABN?
Yeah, so I think that's actually a really good question. And it's probably, I would imagine this is relating to client agent linking that has been obviously rolled out for all other sort of populations. In terms of for individuals and sole traders, we don't have a defined timeline. We're actually want to work with the industry around what's the best solution for those populations. We have recognised the feedback that's come through, particularly since we've rolled out to all ABN holders, excluding sole traders, late last year. So there's no specific time frame, but it's certainly something that we are looking at around how do we protect clients. So for the same things that Deborah was talking about before, about just the information holdings, obviously, that the ATO has, it's really important that we do protect clients. It's also really important that we protect agents in that process. And that was part of the reason for actually having client agent linking in the first place. There's a bit of a myth around client agent linking about it sort of being about the integrity of agents, but it was actually about protecting good agents who were having their identities stolen and then being used to do some really bad things. So it's really important to understand that. We do understand that with any kind of security piece, there can be an impulse. That's in every part of our life, right? You know, I know myself when I'm trying to do something, I go, I can't get in. But it's really important that we do this because of the information we hold.
Thanks. Thank you for that, Sarah. Deborah, I just wanted to quickly ask you, I've had a lot of people asking questions about the engagement letters. And I think one of the most popular ones that I've seen is, why do we need to do that on an annual basis if nothing's changed? And I think it's just a reviewing process more than anything, but could you just give us a bit of detail about that?
Yeah, look, firstly, engagement letters are not a requirement of the TPB, but we do strongly encourage it. And also you just need to, I think, be aware that one of the reasons we don't give templates is because they can be completely different for your different clients. So really simple for your simple ITR, and quite complex for, you know, some of the more complex group structures, etc. The reason we advise you to do it annually is in case there are changes, and it just again sets that expectation. We often don't realise things change. So one of the requirements under the Code of Professional Conduct is to disclose if we're using third-party providers or their information is shared, which includes software providers. So if you are now using a different software or, you know, those types of services, or you're now outsourcing, any of those types of things need to be updated, communicated and agreed with your clients. And I mean, we don't look at services, or sorry, we don't look at pricing or anything like that, but you might have also updated your prices. So, you know, those types of things are really good to include in the engagement letter.
Thanks, Deborah. Hopefully that's answered everyone's questions there. We have run out of time, so sorry to everyone if we didn't get to your question today. We will do some Q&A for our website as we normally do, so have a look there in the next week or so, and we'll have some answers to all the questions that we've had today. But I just wanted to finish up today by giving you some information on how to stay in touch. So as always, I just want to encourage you to follow us on LinkedIn, Facebook and Twitter, because that's where you will see the most up-to-date and latest information from us. We also have our TPB e-news that goes out each month. Once again, that's a really good product to subscribe to. If you are interested in coming along to any of our other webinars that we have, jump on our website at tpb.gov.au/webinars. And also I highly encourage you all to subscribe to our YouTube channel. We record all of our webinars and we place them on YouTube, and we have a really comprehensive library there, and you can actually still claim your CPE for viewing the recordings, which is a really great thing to know. And then we've also got some information on the next slide there on how to stay in touch with the ATO. Obviously, the website is a fantastic resource at ato.gov.au, and the tax professionals newsroom is on that as well. And just the social channels there, Facebook, LinkedIn, Twitter and YouTube as well. So highly encourage you to have a look at those. And then just to finish up today, I just wanted to say a massive thank you to both Deborah and Sarah for providing all that useful information, and also thank you to Nadia and to Audra, who were online helping out with the questions. I know they were kept really, really busy today. So just to finish today, we do have an exit survey, and we would really appreciate it if you could take the time to complete it. It just pops up in your browser, and it's just a great resource for us to hear from you, just to let us know if there's anything we can do to improve on these sessions. Also, if you do have a topic that you're really interested in hearing about, let us know, and we'll do our best to get something up and running on that topic for you. And once again, I just want to say thanks so much for joining us today, and we do hope that you enjoy the rest of your day. So thank you, everyone, and we'll talk to you again soon. Thanks, ladies.
Bye.